How are you doing? This is David W. Williams, also known as Diamond Dave, founder of the highest paid part-time job in the world, Options Trading Academy. Let me know if you can hear me. Appreciate you coming through on a midday live stream. We're going to pretty much just do the audio and the talking head. And what we're going to kind of talk about is where do we kind of think Jerome Powell is going to go with his one? What do you think the Fed's going to go with their rate? And also where we think Jerome Powell is going to go with his analysis, and how we think the market's going to respond to that. Now, we understand that there's a FOMC meeting that's going on the past 2 days. They're going to give the minutes or the analysis of the particular meeting, I think, at 2 o'clock Eastern Standard. And then I think at 2:30, Jerome Powell's going to take questions, and they're going to kind of ask him to give some commentary on the results of the meeting, and then where, we think the Federal Reserve policy is going to go into the future. And I think that may be more important than the actual information that comes out. So we're going to get a number of where they're going to probably be moving the rate for this month. But then also what we want to try to do is get from Jerome Powell analysis of where they're going in the future, because I think that may be the most important thing. So really quickly, let me share out this particular article. And it's going to kind of talk about the fact that most people are expecting a 0.75 percentage point raise this week. Okay. So, and this is because of the CPI data that came out last Friday, which really showed that the inflation rate had not gone down. Essentially pretty much had stayed flat, but it also means it's not decreasing. So that's troubling, because if it's not going down, and a lot of people have said they believed inflation had topped out. But if we see that inflation has not gone down, but it's kind of flat, then what it also means that it can still continue to go up, because a lot of those indicators are lagging, right? And one thing about being in inflation, or definitely being in a recession, you don't necessarily know you're in it till you're months into it. And so I think that report made the people realize that the Fed may have to take a little bit more of a drastic move, because they said that everything they were going to do going to be data dependent. So what I believe we saw Monday was people kind of adjusting for a 0.75 percentage point raise. However, not necessarily this meeting, but in the future. Okay. And what the market is really trying to do is kind of prepare themselves for what they think is going to happen, and also kind of prepare themselves for some of the negatives that they may think are going to happen in the future. And that's what I want people that are traders to really start anticipating. Like, what are the scenarios? So there can be multiple scenarios that you may think are going to take place. If you're trading certain companies, how would those scenarios impact those companies? Right? To me, I don't care if he raises it 0.75. I don't care if he raises it 2%. I don't care if he raises it 3%. I don't care if he comes out today and says we're not going to raise it at all. My question is, based on where I think he's going to raise it, how do I think that's going to impact the companies that I'm looking to trade? Right? Because every individual company can be impacted differently by the move in the monetary policy, based on what line of business they're in, what industry they're in, and then also how those companies are constructed. You're looking at companies like Royal Caribbean that have a lot of debt that they need to pay off, right? Cost of capital can impact that, especially if they need to take on more debt. So if Royal Caribbean, for example, is still going to be under a lot of financial strain, and they may have to go back out into the market and go get some new debt to keep everything going. Well, if the cost of capital is going to be higher when they go back out into the market to go get some new debt, because we know now everybody's talking about how, rates are higher. So if I have to go back out into the market to go get new debt, to bring on new debt, and I'm already under financial distress, well, how do you want to call those people? My cousin used to be one. The underwriters are going to look at the situation and say, okay, well, you know what? Because you already have a higher default risk, not only are we going to take the base rate, right? We got to take an impact that the base rate has changed. We also got to take into a fact that you're under a lot of more financial risk, which increases your default risk, which then therefore increases what the cost of capital is going to be to you, which is therefore going to increase how much more you got to pay out to pay us back. So what does it mean is that the revenues are going to be strained paying back that new debt, right? So that's why I want to really encourage everybody. The numbers not as important as based on the companies that you're trading, how they're going to be impacted. You look at a company like a firm was, they're playing the securitization game. Okay. If I can go to the Fed and get a guaranteed rate of return, right, Why would I buy securities from a firm? Now, I may do it from a diversification standpoint, but if a firm is going to give me 2.5%, right, or whatever the rate they're going to give me, why would I take their rate as opposed to going to the Fed or going to the U.S. government and buying their treasuries? And I know this is going to be guaranteed, because a firm has a default risk, because their yields are coming from the fact that people are going to pay back on what they bought. So the cost of capital, and they're essentially making what I would call the risk-free rate, and changing that risk-free rate, it's going to be very, very company dependent. Some companies are not going to be impacted by much. I don't think Apple's going to be impacted by anything the Federal Reserve does, because they have too solid of a business. But that's what I want people to really consider. Looking at the companies that you're looking at, how will they be impacted, right, by this particular move? So going back to the article, two consumer surveys show that household expectations of future inflation have increased in recent days. That data could alarm the federal officials because they believe that such expectations could be self-fulfilling. What they mean by that is that when people assume that inflation is going to be higher, they may hold their money, and they may not outlay capital. They may not spend. They may not invest in things. They may not take on loans and things of that nature, because they believe that they're going to be under financial stress in the future. So most people that are savvy, if they believe that, what, my job is at risk, my financial situation is at risk, what they're going to do is start sitting on their money. And then that could be an issue, because we're already in a supply chain issue. So what they're going to do, and they talked about before, is they're going to probably get more people to be unemploy more people, which they believe is going to bring down inflation, and then they'll worry about a recession. I think we're already in a recession, but I don't think they'll probably announce it till after Christmas, right? And we still haven't fixed this supply chain issue, and then this issue with gasoline and energy it's what we have is a lot of things going bad at the same time. You ever had a car and the car got a lot of like minor issues, and you can manage them, and then one day you wake up and everything goes wrong in the car? Like, that's to me kind of like what has happened this year. I think the worst thing that ever happened is that Putin decided to go to war with the Ukraine, because not only do we got an energy issue, we're going to have a fertilizer issue if they don't get that work out. And then we also may have a food issue. And if we got a lot of unemployed people and they don't have liquidity, they don't have money, and then on top of that, they can't buy the food that's available in the market because it's too expensive, it's going to cause a lot of issues for whoever is in office, right? Let me go back down here. So the University of Michigan Consumer Sentiment says long-term inflation expectations rose to its high level since 2008. The New York Fed reported that a survey showed consumers' short-term inflation expectations had jumped, suggesting that more households might be expecting higher inflation to stay, even though the media didn't rise. And I think that's going to be it for that particular article. Okay, so currently right now, the 2-year Treasury is at 3.38. I'm sorry, let me change that. Okay, so it's at 3.38, and it's gone down a little bit since earlier this morning, right? So they may be, that particular market may be anticipating whatever information they're going to get from the Fed. But we look at over the past 3 days, it has spiked up, since it has spiked up pretty well, off like maybe three flat. It's gone up. And I remember last year, the rate went to like 2 something and the whole market sold off. So now people are kind of getting desensitized to the new rate. So the rate has to keep going up for people to get that rate shock. What I think people need to be worried about, and I had wrote this thing down, is what we call credit market stress. The system is addicted to cheap credit. If the cost of credit goes too high, I think it could cause a lot of people to not invest, because they're worried about one, default risk. Because we're in a society where everybody kind of has been addicted to getting cheap credit, cheap liquidity, right? I know people that bought houses 25 years ago. If you would look at the rate in which they bought their house 25 years ago, you wonder why people was complaining, because people in America are used to buying a house at 2 and 3%. So they go crazy if it's a 6% rate. The problem is houses are way more expensive than they were 20 years ago. So you got a more expensive house, plus you got a higher rate. 30 years ago, you can get a house for $100,000. So it wasn't that bad that you were buying it at a 6% rate. Now a house costs $500,000 or greater, and they're going to put 6% on top of it, right? So that's the issue. So we could go into a period, if they keep raising this rate, of what we call credit market stress, and I would really encourage people to really research that. because we have a system that's addicted to cheap credit. This whole American system works because we got massive amounts of liquidity. You go to other parts of the world, it's very difficult to get any financing because their monetary policy don't work the way it works here. And we denigrate other countries for doing what we've done. But the reason why we can do it is because we got a military that makes people use our money. So Zimbabwe can't get away with what we do because Zimbabwe don't have a military that makes people use their dollars, right? So when they print the way we print, it doesn't work, right? But we can print a ridiculous amount of cash, and I don't mean in real life, but we can make the markets very, very liquid because we can force the majority of the world to use our money. So then therefore, our money stays in circulation. It keeps a value. And also we got the petrodollar backing us up. Zimbabwe don't have those luxuries. So they follow the monetary policy that we follow. They end up in a problem. But most countries have liquidity issues. We don't have it inside the United States. So if they keep raising the rate, we could go into a credit market stress. In my opinion, not investment advice, Powell goes to the 0.75. The market may see it as more inflation, and this bond, that 10-year, could go even higher. Powell comes out, and it doesn't necessarily talk about what they're going to raise today, but in the future. So what future raises they're going to have. He goes out with a 0.50. The market could be disappointed, and bonds could go higher because of uncertainty. What people got to watch out for is that Powell's going to speak today. He also going to speak Friday. And we know we go into a long weekend. The market's closed on Monday. I think he's doing this because he wants to control the narrative, right? So I think he's going to come out today, see how people react to it, and then come out Friday again and try to get back to control of the narrative, because one of the biggest things they're trying to do is control narratives. It's called, it's a certain form of economics where you try to control the narrative around everything. What I want people to watch out for, because we've seen this before, Powell comes out, people get the news they think they want to hear. It causes a rally or it causes a sell-off. Then what happens is either the next day or maybe even the next week, once people really digest it and they start to analyze where they think the economy is going as a result of the monetary policy, then that's where we see the real reaction. So just for all my savvy traders, don't get caught up in the initial reaction, right? Because a lot of that's going to be based on like a euphoria or, a disappointment. Because people have a high expectation of something and it doesn't get met, and then they react to it. But I think once people take the information and they kind of analyze it, it can cause the real reaction in the market, right? Because I remember, I want to say maybe his last time he came out, he said, okay, we're going to raise 0.5 and 0.75 is off the table until we get future analysis. The market ran up that day. What did it do the very next day? It came out and sold off, right? So I want people to really watch out for that, because a lot of people in this market, they just kind of take what the headline news is and they think that's how the situation is going to go. And a lot of times once people really digest it and they start to really understand, how is this going to impact our trading plan and our trading strategy and our returns, then they kind of determine what flows are. A lot of money has been pulled out of this market since the top of the year. A lot of it has not gone back in. And it may not go back in, right? So I wouldn't assume, because maybe people get the news they hear today may be bullish. It may even be bullish to the end of the week. We talked about before. Monday is, I believe the market is closed on Monday. If that's true, then we got a short week. We may not see the real reaction until next week, once people can sit back and digest it, or the news may be so negative to people start selling out because they want to make sure they continue to get out of their position before we go into this long holiday. What the Fed has done is they talked about we want to do a soft landing. I think that's why they're spoon feeding people. And they're really trying to control the narrative around this. And I think this information about the 0.75, they released it through their channels to get people to maybe have an expectation of it, just in case they do decide to go in that direction. And it's because they're very much trying to control the narrative. They don't want to dump the whole market. And that's something that they're doing it from a very deliberate standpoint. So they're very much trying to control the narrative around this economic issue. Some of the things I'm going to be looking at outside of the companies that I'm trading. So it's something called let me make sure, can I show it one time? So it's the UUP. So the dollar bullish index. So cost of capital goes up. The dollar can potentially get stronger. That'll also drive down the yen. So that the UQP. I'm also looking at, and I'll type this in the actual chat, these two tickers here. excuse me, it's a TOT and I believe the SHY. Also looking at those tickers. Let me put that up as a banner. And those can also be impacted by the policy. So you may want to do some research this weekend. I don't know, tonight, whatever. SHY, I believe that's it. And look at those tickers. TLT. I think those are correct. And so that's the things that I think can be impacted. Also, junk bonds. I think one is junk. I think the other one is HYG. So let me also put that up. Is it junk? JNK. So it's junk. Also going to be looking at junk, right? And then also it may be the other one. I think it's and also HYG, the corporate bonds, right? Because those have been selling off pretty much, I want to say all year. And I want to see if they continue to sell off. So that's up on the day. So those are tickets that I'm going to look at. So that's, that's HYG on the 2 year. Those started selling off around November of 2021, and they've gone down. They recovered a little bit, and they started to sell back down again. So these are going to be very sensitive to the monetary policy. So there may be some opportunity with those, but really look at your tickers and ask yourself, how are they going to be impacted by the policy, regardless of what direction it goes in, right? Because the number is not as important as how it's going to impact that particular industry or sector, and then how it's going to impact those companies based on how well managed those companies, are. So me, for example, I'm very short on Royal Caribbean. I think the cost of capital plus higher energy costs is going to put that company in a very, very bad position, right? I just think the revenues that they're going to have to do to try to offset that I don't know if that's going to be possible. Could be, but I'm not sure if that's going to be possible for them to get over that. Any company that's playing the securitization game where they're selling people a product and then they're packaging those particular payments as security, and they're trying to sell them back to investors looking for a return. Those returns most likely are going to have to beat what I can get off of a 10-year or maybe even a shorter term treasury. Because if not, then why would I buy from them? Because what I know, if I get a treasury, I know that the payment is going to be guaranteed. So I may be willing to take less of a payment just to lock that guarantee in and just keep moving my money like that. So I think now with the treasuries, you can move your money every like 22 to 30 something days. So those are the kind of things that you want to consider in looking at your particular companies. And I did this a little early because I wanted to get this out of here before the actual report came out. So we're going to go through the comments and we're going to go in and get up and out of here. I appreciate everybody for coming on. We got 73 in the mid-afternoon. GC, what's going on with it? Mikhail G, Urban Homesteader, Miss Lady L, Excalibur. Mr. G, I really appreciate the super chat. I appreciate all the support you've been giving the whole time. I really, really appreciate it. Matcha Babe says 2:30 p.m. the market will tank. Let's see. It might start before that because I think they put the report out at 2 o'clock. GC said the street's about to get worse. Yeah, maybe. Cost of capital keeps going up. I think it keeps pulling money out of the crypto market, which I like because it's going to allow me to get in at a cheaper price. But I wish I knew how to short crypto before all this happened. But like I told you before, I didn't like the exchanges and how they kind of had their situation set up. Do I have an opinion on how an interest rate be raised by the Fed? I don't have an opinion. It doesn't matter to me. They can raise the interest rate to 10%. All I care about is how it's going to impact the companies that I trade. And that's what I really want to encourage people. I'm actually in the market and actually have money in the market. So what I want to really encourage people to do is don't get caught up in the number. Get caught up in how the number is going to impact your position and how you can benefit from it, whichever way it goes. I don't have an opinion on how the rate's going to raise. Either way, it's whatever, right? I've been anticipating a rate raise since the last year. So I positioned myself for it early. And I just look, like Coinbase. So the rate raises, most likely pulls the money out of crypto, which means that Coinbase most likely does worse because it's a broker and brokers only get paid on volume of transactions. So if less people trade crypto, they make less money, and they make less money because as the cost of capital goes up and people are not as liquid, and we go into, most likely we're already in a recession, high inflation. People don't have as much money to do things like buy crypto and trade it. So money gets pulled out of Coinbase, right? Which means that I make more money on put contracts. 0.5, 0.75, 1.0, all it does is increase the speed of the fall, but it's going to fall. So I don't have an opinion on how high. I just have an analysis on what do I think is going to happen to the companies that I'm trading based on the rate going up. So Urban Homesteader says, consider the impact of a 100-point base increase and certify exactly. The Fed is serious. I personally don't think they're going to go through with it through the end of the year, but that's a whole other conversation. We might talk about that on Sunday because we're going to have the Sunday talk. I don't think I think they go back to quantitative easing because the economy needs cheap credit. This whole deck of cards called America has been built on massive amount of liquidity. I don't think it works any other way. I don't think people in the country want to live a world. I think people will riot if they have to accept I can't get what I want to get because I don't have the cash. I just think they go crazy. So they got to keep the society moving along and keep everybody paying taxes and keep everybody paying merchants. And they just got to make sure that the credit markets are where people can get what they want. Because most people are not trying to get wealthy. They're not trying to get rich. They're just trying to get what they want. So I don't think they may do this through 2023. I don't think they will, but I could be 100% incorrect. And that's why I think they spoon feeding us. Because I would have came out the gate at 1%. That would have been the first raise. And I probably would have told them we're going to raise 1% the next meeting. But it would have put everybody into a shock because then people would not be able to get what they want. And America works because the average person doesn't really realize their economic position. Because why? I can buy what I want. I got credit. I got buy now, pay later. So as long as I can get what I want from a consumer, I don't think about the fact that I really don't have any money. I really am economic unstable because once I have a big accident and I got to pay it like medical, that's when I realize how much money I don't have. So I just think they got to keep the ball rolling. So they want to get the inflation down because really high enough inflation, if it's too high, people will stop buying because they don't have it. And then that's going to get them upset also. But we'll probably talk about that a lot more Sunday. So he said he got decent position stables. I feel you. Yeah. They said they want to do a slow, I don't know what you want to call it. They want to do it gradually. And I wouldn't do it gradually. I would have just came out the gate with it. But that's me. I'm not in his position. So he got to do what he thinks is best. So we'll see how it rolls out. Yeah, definitely. And they've lost a lot of value too. Lost a lot. And I think coin is going in that same direction. Coin's issue is that they only get paid if you transact. They don't get paid off anything else. The reason why a lot of the big, the other firms can do commission-free trading is because they actually sell financial products. Coin doesn't. They're just a brokerage, right? So if you don't trade, they don't make any money. And they got to do big volume. That's how the other guy makes money. The guy Sam, guy's a billionaire. He gets paid on every transaction. So I just think with a company like Coin that's publicly traded, once their transaction volume start to go down, they're going to kind of really find their real value. It probably might be 25, maybe if they're lucky, $40. I think probably under that. But they may be a $25 a share company. They definitely not worth $300 a share. That was crazy. I mean, that was just insane. But if the crypto market becomes robust again, which it goes in cycles. So once crypto becomes the end thing, I think Coinbase runs back up because they'll be able to show the transaction numbers. But they remind me, and a lot of people are not going to understand this because they may not know about this. Skateboarding for a very long time went in cycles until the internet got real big. So you would have booms and busts in skateboarding. So you'll have an era where like you can make a lot of money skateboarding. And then you'll have an era to where you go broke trying to be a skateboarder. Then like 5 years later, you can make a lot of money. And I just think these crypto exchanges got to prepare for that. You're going to have boom and bust cycles in crypto until it stabilizes to where, revenue starts to become a lot more consistent. But yeah, a Coinbase at like $300, $250, $200 was wild. Yeah, I doubt he does it, GC. Because I mean, like I said, people are going to go with too much of a shock. This country only exists because people can buy what they want. That's why we got it is my own opinion. That's why we got the relationships with China. We got the relationships with Vietnam to produce manufactured goods for us so people can buy what they want. This whole thing goes over if people feel like I'm working and I can't buy these things that I want because I don't have the money because the credit markets are too high. People want these cars. They want these houses. They want to finance these educations. They want to do this stuff. And you got to give them, and as long as they can do it, excuse me, they keep working and they keep paying taxes. And so then we're able to keep the ball rolling and finance this military, right? Which is really keeps this thing going because we got all these people working, right? That are going to keep working and keep paying taxes. And that's why our treasuries are guaranteed. And that's why everybody worldwide invests in them because they know they're going to get the money. They know that the U.S. Taxpayer is going to pay their taxes and I can get a return on my capital. Yeah, definitely. Yeah, he's going to play it safe. But I think he's getting instructions to play it safe. You know, so the people that he works for are telling him how the game got to be played. And I think he's going to do it because, like I say, anything extreme, I think, creates a lot of unrest in our society. Because if people are unemployed and gas is real high and they can't buy food, I think they lose control of the situation. Good deal. Good deal. I'm glad you was able to do that. Glad you was really able to. Yeah, having debt that you got to keep servicing, it eats up a lot of your revenues. And big businesses can do it because they got a ways of dealing with their credit issues that average consumers can't do. And they also make a lot more money. I mean, I would look at health. I would look at ask myself, how I would look at historically, how does healthcare perform in these type of times? Because I really don't trade healthcare. So I would just look at historically in these economic situations, how's healthcare performed in a high inflation environment? How does healthcare perform? And I would try to figure out how can I forecast based on historical data. So that's what I will look at because I don't really trade any healthcare. I buy healthcare stocks, but I don't really trade healthcare. But I'm a long-term buyer of healthcare because everybody's going to need it eventually. But I don't buy the experimental healthcare. I buy the old school hospital type stuff because they're not going anywhere. Yeah, definitely. I mean, but that's what it's all about. You know, that's governing. Keep the ball rolling, because keep the taxpayer paying taxes and make sure that the military stays financed, which makes sure that the dollar stays strong. Make sure we got access to energy, and it's about just keeping the ball rolling. You know, that's just what it is. You know, that's all this is keeping the ball rolling. Ain't nobody really trying to change nothing. Yeah, we may. I'm not into all the other coins, but I mean, that may have to happen. You know, I buy one coin all the time. So that may have to happen. I never got caught up into all the other coins, and I missed all the runs on the altcoins. I missed all the run-ups. So I just focused on the one coin, and that's all I worry about. So that may need to happen. You know, we'll see. But I tell people looking at Bitcoin was like $2,000 in 2017. So it's 20,000 now. If you bought in 2017, 2018, you still way up. So it's for people that bought at 30,000, you're down. But if you bought a whole Bitcoin for 2017 into 2022, it's 20,000. There's not an investment in the world that can get you that kind of return. That's legal. So you still up. You know, so I just think it got so high so quick. Now it's coming down. But it's done this before, and I think it's going to do it again. Something that Mr. G talked about, and I agree. I don't think Bitcoin stabilizes till around 2030. That's my own personal opinion, right? So I'm using the sell-offs as an opportunity to get more because I missed out a decade ago getting it. So I want Bitcoin to go to 10,000 so I can buy a whole lot of it. It don't bother me because I'm going to be here in 10 years, right? If I'm not here, somebody else will be here. They could get it. Okay, GC said he's setting up for the next crypto run. Yeah, do what you got to do. It's going to be another one. Believe me, these things go in cycles, especially something as new as that. You know, crypto's so new. It's going to be very volatile. And so I would just get set up, because when it goes on another run, it may push past 100,000. It's just this year was a kind of funny year, top of the year. And a lot of people gonna get, cost of capital is gonna go up. A lot of people money gonna start getting tight. But we'll have another economic bull run, because the majority of the market is bull runs, not bear markets, even though they could talk about like '08, things of that nature. Even though it took a long time to get back to where we had dropped, once we hit a trough, we always run up out of this. So at the bottom, the move up is the bull run. I don't consider the bull run we get back to where we dropped off at, me personally. So we saw in 2020, we dropped off. We went on a bull run. We did the same thing in like 2017, 2018. We did the same thing in '08. So once this thing bottoms out, we're going to just go on another bull run. Whether it starts in 2023 or it starts the year after that, they're not going to let this market tank long term. This thing doesn't work. This whole society doesn't work if people cannot go to the mall on the weekend and spend money. Like, it just doesn't work. This is not like other countries. This is America. This is people's expectation of how their life's supposed to work. Right? So they won't go to work and pay taxes if they can't go on the mall on the weekend and buy pizza and buy shoes and stuff like that. They're just not going to do it. Yeah. I want to look into that. If we can get better exchanges, I could trade it. I just don't. Some of these exchanges, man, they seem kind of wonky. They seem kind of like them exchanges that people be gambling with. You don't know if you're going to get paid out at the end of the day. We got to just see. I don't think Biden has anything to do with recession, because he doesn't impact monetary policy. So I don't think he can solve it. What I think the role of the president is, in my opinion, is to create programs so consumers can continue to consume. Because if we look at the S&P 500, I got a video on this on my YouTube. The majority of the countries that are S&P 500 are consumer-based corporations. They need consumers consuming. So I don't think the role of the president has anything to do with economic policy, because one, he doesn't control monetary policy. Congress doesn't control really how much money gets printed. Really this economy is being run by the Federal Reserve, and who's giving them instructions, right? Because they're taking instructions from somebody. And BlackRock, that's who's controlling the economy. So whatever they decide to do is how it's going to go. So I want to see if he actually cancels student loan debt. But to me, canceling student loan debt is really a mechanism to get people to spend, because most people, if they go and say, hey, you don't have to pay the $10,000 on the student loan debt, their attitude is, well, now I got $10,000 to go buy stuff. That's how most people think about money. They're not going to see it, well, I can take that extra 10 grand and invest or buy real estate. Their attitude is, well, I got $10,000 freed up to go buy. So to me, the president exists. He has a lot of different roles, but he exists to make sure that the economy stays healthy enough to where consumers can spend, right? Because food stamps is what? A spending program. Stimulus is the same thing. They're spending programs. So whatever spending program they got to come out with to make sure that consumers keep spending, that's what they're going to come up with. But food stamps is a spending program, right? That's what it is. It's a program to make people go buy food, which serves corporations, and many of them in the S&P 500. Right? So it's about feeding people, but it's really a spending program, right? Make sure those corporations keep getting money coming to them. So whatever he got to do it, and then the next president going to be on the same format, whatever they got to do to keep that thing going. I like the student loan debt, but if I was to get the relief, I don't have debt, I would encourage people, if they waive the money, figure out how you can use that savings to get either to save it or to get a return on that capital, because you don't have to pay it out. What most people are going to do is they're going to go back into the market and they're going to spend that surplus of money. And they know that. That's why they're going to do it. Yeah, definitely. Yeah. I need friends like that, GC. I need to find a crypto dude like that, man, so I could be a billionaire. Because I never heard that dude till about 2-3 years ago. And he don't look like he halfway know what's going on, but he knows something, because he up. He ain't just up a little bit. He up a whole lot. I need to get some friends like that. Yeah, definitely, Mrs. G. I agree with you. Ali's platform is really not that robust, but they do have decent customer service. You know what I'm saying? So that's the thing. So that's the trade-off. They got decent customer service, but their platform is really not that robust, especially when you start talking about conditional trades. So it's hard to find somebody that got they got the comprehensive thing, because I just think the issue is that they're going to a lot of times focus more on their bank products, because they don't really make a lot of money on the trading side, because everything is commission free. So I think that's one of the challenges, and it's gotten a lot better. Ali customer support used to be terrible. Used to call somebody, it took like 3 hours to get on the phone. So they've gotten a lot better, because there were times to where, I want to say 2020, where the market was really volatile. The whole platform would freeze up in the morning, and I was trying to get out of trades, and I couldn't get out. The whole platform was frozen because it was so many people trading at the same time. The service couldn't take it. That stuff was scary, because I didn't want to get caught in trades on the wrong side of a trade and I couldn't exit. They would tell you, well, you can call the trading desk and call the trade in. But I was like, well, I can't get anybody on the phone. So I can't call you to tell you to make the trade because I can't get you on the phone. So it was weird, but they've gotten a lot better on that now. But I really wish there was a platform to where they had everything. I wish there was a platform with a combination of like Ali's customer service and Thinkorswim's platform. Even though I don't like Thinkorswim's platform, because to me their fonts are way, way too small. You can make them bigger, but the way it's laid out, to me, they try to put too much information on one page. But that's me. That stuff confuses me. I try to keep my layout real basic. If people knew how just the simplicity of my layout when I trade, it'll blow their mind. I look at like 2 things. I don't know how people do it with like 8 screens. It's too much. Yeah, definitely. And that's something I read about too. So he's going to try to make sure that crypto stays viable with those donations. But he understands how the game is played. He got to put money behind what he's trying to do. I feel you. Yeah. Dude's up, like up. He said he's going to give all his money away. So let's see. And let's see. I was trying to short tether GC and couldn't find a mechanism to do it. I was able to find a mechanism to short Bitcoin, but I didn't like how the exchange worked. They wanted me to wire transfer. I think I told you this. They wanted me to wire transfer money. I want to do an ACH transfer. So I wasn't comfortable with that. But I could have made a lot of money on this Bitcoin fall, but I couldn't figure out a mechanism to take the other side of the trade. So I just had to fall back off of it. But I was thinking about, because of Bitcoin and how it's hinged to Tether, I was thinking about shorting Bitcoin like a year ago, because I did a lot of research on that. Because I would bet that Tether collapses. I'd take the bet and just sit back. Can I get a mechanism or a product to short Tether that works for my budget and my time span? And if I could get it, I'll take it. And I'll just kick back and wait for it to happen, because I do think it's going to happen. I think it's going to happen when the right people want it to happen. The same thing with Luna Coin. Luna Coin collapsed when the right people wanted Luna Coin to collapse. But I didn't know how to short Luna Coin. So I just got to, they don't necessarily have the instruments yet. This is kind of how Bitcoin was early on. It was very difficult to buy Bitcoin. So that's why a lot of people wasn't in the space. To me, they don't have a lot of really sophisticated derivative products around the crypto space yet. They will eventually, and then I'll probably get more involved in it. But as of right now, it's a lot easier just to trade the actual, what we will call a security. They don't have a lot of derivative products around the crypto space as of yet. But yeah, I last year was looking, I put that on my Facebook page. I was trying to figure out how to take the other side of that Tether situation, because of the way that thing's constructed. When it starts to unwind, it's going to unwind real fast, and nobody's going to be able to stop it. But it's going to happen because somebody wanted it to happen. So I'm betting that somebody's going to eventually want it to happen. That's what I would take that bet. You just got to wait on it. Yeah, I believe you. But the whole thing is rigged. That's why I want to get people into these markets. Like, none of this stuff was on the table. It was never built that way. Like, none of this stuff was on the table. I don't spend a lot of time talking about how rigged it is. My thing is that you can make money on both sides of the situation. I ain't worrying about it being rigged. Everything is rigged. It's people that tell you that sports is rigged, right? Some of it is. Some of it definitely is. I've been watching basketball my whole life. Half these playoffs should never go 7 games. They're gonna go 7 games though, because they're trying to sell advertising dollars. Right? They're gonna go 7 games. Believe that. Yeah, I mean, some people need all them screens. I don't watch all that though. But I get why some people watch like the overall indexes and the company, but the whole layout of screens like you flying an airplane, that's not me. But if some people, that's what they like. Some people like a lot of information, and I'm cool with that too. Right? When I sit down, I already know I've done so much prep. I don't care about a lot of extra stuff when I'm getting ready to make a trade because I've done so much work ahead of it. So I'm able to condense everything down. But that's me. Everybody different. And I don't do a lot of day trading. But even when I do day trade, all I'm looking at is a spot. I'm looking at the live chart. I do not look at headlines when I day trade the spot. I just look at the chart. I don't even look at level 2 data. I don't care. It's going to show up on the chart anyway. I just look at the chart because I'm looking at a trading range. So that's all I care about. If it goes outside of that range, I'm not going to mess with it anyway. So I come in knowing what my range is. Yeah, definitely. But see, GC, I wish I would have known that they was going to do that. I could have positioned myself because that thing collapsed. Like it like over the course of a week, it went from being worth whatever it was worth to being worth like cents on the dollar. So, but I'm not in that space because I can't find the mechanisms. They don't have the derivative market yet that I need because I'm a derivatives trader. I don't necessarily short the actual underlying asset. That's not really my game yet because I don't want to take on a lot of margin. Okay, so I'm gonna look up FTX. But I found an exchange to short Bitcoin, but it was the way they wanted me to fund it. I wasn't confident with that funding mechanism. And they didn't have good customer support at all. All you could do was email them. It wasn't nobody you could call. So I'm a wire transfer y'all some money, but I can't even call y'all. And then it just was, it didn't seem to be all the way on the level. What I like about Ally is that they're a real bank. Fidelity and all these is real like banks. So I know I'm not going to have no problem sending them no money. Yeah, definitely. Yeah, definitely. Yeah, I believe it's Celsius. But Theo what is the mechanism to short it? Do you got to short it like a traditional equity? Do they have a derivatives market? Because I'm more of a derivatives trader than a person that shorts from equity. Because a lot of times if you want to short from equity, they make you take on a margin. And I don't necessarily want to do that. So do they have a derivative of those particular cryptos or a mechanism that acts as a derivative to where you can short it? Because it's easy to short equities because we got an options market that's very well established, very liquid, it's very secure. You're going to get paid out, with the SPY and the indexes, you get paid out literally instantly because of the volume and the liquidity in those markets. So you don't have no issues. I don't want to be up on no position $100,000 and I can't get paid because they don't have the money in the exchange. Because I'm gonna have to go out there and go get my money. I feel you. I gotta look into it. But this is the thing, GC. I don't want to take away from what I'm doing that's making money to try to figure that out. So I need to partner with some people that already know how to do that. And I'll do that. I may start looking into that next year, like 2023. Because I don't want to take away from what I'm doing that's making money to do something new. So I'm in 2023. I may look to potentially partner with some people that's doing that. Because I'm looking for crypto options. So you say they got crypto options. Okay. I might hit you up. Because that's what I was looking for. Because I've been trying to short Tether forever. That whole Tether thing, man, you talking about a deck of cards. That's a deck of cards for real. Yeah, definitely, Mr. G. That's why I know I don't gamble. The only way I'm gambling is if I'm going to Vegas or Atlantic City, because they got all these little exchanges, that's on the internet. And you don't have how do you know they're gonna pay you if you win? You hit the parlay and you up whatever you up, they're gonna pay you out. So that's why I don't mess with it, because I'm gonna go get my money. I got to get mine. So I deal with banks, right? Because I know they're gonna pay me. I don't have liquidity issues, because that's what happened to I think Robinhood had an issue to where they stopped people from buying because they had liquidity issues, because the people that they do lay liquidity through said, we can't let you trade, because if everybody cashes out on these GameStop trades, we can't pay it out. So that's something you got to worry about. Okay, I appreciate it, man. You could do that. Yeah, I got a consult from Chaston on the NFT. I looked into the NFT, but I got to see if that market rebounds, because they've lost a lot of value. So I got to see if that market rebounds. And then what do NFTs? I want to get into sports NFTs. I think that's what the real market's going to be at. And also like the little kitty stuff. You might be too young to remember Pokemon, but something like that in the NFT spot, to me, that's where the money's going to be. This stuff that they doing, I don't get it. But like, you might be too young to remember Pokemon. Pokemon in the NFT space, that's going to be the biggest thing in the world. They just got to get the right product for it, right? Whatever that product's going to be, but it's going to be Pokemon in the NFT space. Once they do that, it's going to be over. That's what's going to drive all the NFT money. Yeah, definitely. I believe it. Yeah, I watch some of his stuff, man, but I need the information. He kind of go off on tangents, and I'm not a big fan of that. Me, I just want to get the info and go about, the people that you got a problem with and all that. That don't have nothing to do with me. So he got real good information, but all that other stuff, and he run with some people, that's what they do. I'm against any of that type of stuff, because if you're not going to do that in real life, might as well leave it alone. So he has real good information. He knows his stuff, but I don't have the time to sift through his personal issues of people. That's him and them. I wish they would, what I'm saying? So that's why I haven't really tapped into a lot of his stuff, because I just want to get the information and keep it pushing. You know what I'm saying? That's the thing. So, I rarely get on live stream and talk like this, because it's not, it's not just the topic. I try to come in there, give you the topic, and get off. And I'm going to talk about that Saturday, as I try to get people to get away from a lot of the personal narratives and just get to the money, because that's all this country's about anyway. And we get so many people distracted with the personal stuff, and you're not going to make no money at the end of the day. Like, you're just not. One of the biggest things that held me back when I was in school is if I didn't like a teacher, I felt like I couldn't learn nothing from them. Dumbest mistake I made in my life. My mama told me I was making a mistake, but I wanted to do what I want to do. You don't even have to like nobody to learn from them. But the question is, what are they teaching you? A lot of people just appealing to your emotionalism. So I just try to get people to understand that, like, I want to encourage people to get around people that can help them get to where they want to go, if they have like a financial or a goal, and to leave that other stuff alone, because at the end of the day, it ain't going to add up to nothing. And I'm going to talk about that on Saturday. A lot of people, because of who they're listening to, have missed out on the opportunity to make a lot of money over the past 2 years. A lot of money, because of who they're listening to and this personal stuff, as opposed to focusing on that paper. Right? Because that's what everybody else is doing, but they getting you caught up on, man, get to that paper, man. Just worry about that. That everything else will work itself out. So dude got good information. He does. Always has. But them little issues and dissing people that I know you wouldn't diss in real life, man, I'm not for none of that, bro. I try to avoid that type of stuff. I just try to get away from it, because it ain't going to add up to nothing. But big up to him, man. Hope he keep doing this thing. I already got a real good course. Big up to him in his little situation. But all that back and forth stuff, man, y'all leave that alone, man. You see, these people got federal cases behind that type of stuff. I don't know why y'all want to go behind them with that stuff, man. You know what I'm saying? I don't know why you want to do it. But, I guess it's cool until the people show up to put you in prison. You know what I'm saying? They about to give Young Thug 40 years in prison for that type of stuff, man. Leave it alone. Yeah, you're big. And it's still somewhat big, but like it was the biggest thing in the world like 10, 15 years ago. So it's going to be big. I used to have something, used to do like collectible cards, always did sports cards, still got old sports cards, still got an old Michael Jordan card. So I'm looking for the NFTs in the sports space, right? So GC says that the people that's creating the projects, I don't know how to create no project in the NFT space, but I would probably buy some of the sports NFTs if I like the NFT and the player they had around it. I liked it. Big up to Erica. Peace up to Erica Williams. right? She had a real good video yesterday about real estate. Y'all need to go watch that. Real good video yesterday about real estate that she did live stream. Y'all need to go check that out. Yeah, it is, you know, but people was corny, bro, before they ever got on the internet. So I don't expect them to do no different. You know, they was corny before they got on here. I just want to encourage people, man, leave that stuff alone, man. They ain't gonna get you where you want to go. And you see, they giving people time behind this type of stuff, man. You know, sometimes you can only pick on a person so long before they react. And so I just want to tell people to avoid it. You know, Taxstone may never get out of prison because he just got into this mindset that he got to keep picking at people and picking at people. And then when they met him in real life and it turned into a different situation, it went left and now you in prison. But he started that. And nobody don't want to say that. But he started. I sat back and watched him do it. Because he got into his, the way I'm going to blow up is I'm going to keep messing with people and messing people that's not even bothering you. Leave it alone, man. You know, you can have your opinion on stuff, but just going after individual people, you know, I say what I got to say, man, and I leave it alone. I'm not finna try to make a campaign out of dissing folks. Okay. MEV, minor, maximum extractable value. Man, this stuff's so complicated. Yeah, definitely. You can. And I hang around a person until they become like detrimental to my peace of mind. But I ain't got to like you. That's what I messed up when I was back in like high school. If I didn't like the teacher, they couldn't tell me nothing. Big mistake. My mama told me that was a mistake too. So I don't look to like nobody like that. I like, is the information they give me, can they get me where I want to go? Because you can be in a relationship with somebody that don't like everything about them. That's just how it goes. Yeah, it is what it is. You know, I don't look to offend nobody, but I know people ain't gonna like everything I say. My brand is not, I'm gonna be super offensive, right? But people not gonna like everything I gotta say, but hopefully I can help you with something that could be beneficial to you. All right, appreciate it, Urban Homesteader. I appreciate it. Yeah, but he didn't do what Taxstone did. Like Taxstone was really tripping with people. That's why it went the way it went. You know what I'm saying? Joe Budden already had gotten assaulted for talking about people on the internet. So he knew not to do that. See, I go back with it because Joe Budden was one of the first rappers to really push social. He had been assaulted in real life for talking about people on the internet. So I think he kind of realized, you know, that might not be the way to go. When Taxstone did it too, and like I said, it just went left and now he in prison. And because of his record, he may never get out of prison. You know, but he didn't have to do that. He had Charlemagne the God backing him up. You was in position. You had talent on the podcast level. All you had to do was just play ball. All that negative, come on, man, leave that alone. But some people think that's the only way they're going to get a name is go at people. And everybody, you can only pick on somebody so much, man. Everybody not for that type of stuff, man. And so some of these dudes, man, the people they talking about is like, bro, you wouldn't say that to that dude in real life? But so you are assuming he playing like you playing, but everybody not playing. That's the first thing you got to understand. So I try to stay focused on the paper. So that's going to be it, man. Talk coming in 10 minutes. The information is coming out in 10 minutes. So like I said, everybody manage your position kind of based on the news. And I want to really encourage you to, regardless of what comes out, the initial run may be euphoria or maybe disappointment. I would encourage you to let that settle. And then let's see maybe Friday or maybe even next week, if the markets are actually closed on Monday, how people respond to it. Because we still got another 6 months of the year. And so either we're going to keep going into this bear market, which is after a while starting to get kind of boring, or we're going to go into a bullish pattern, or we may just trade in a very tight range until we figure out what the next play is going to be. So I appreciate everybody for coming through. Like I said, there's a lot of people for a mid-afternoon live stream. I know people working, they doing their thing. I appreciate everybody going through. If you got any questions, hit me up in the comments. And like I say, man, let's focus on this paper. Let's focus on getting these assets. Let's focus on staying out of trouble, man, keeping our health up and worrying about our families. And let's get to it. Talk to y'all later.